please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair and it's turning out to be a session where we are seeing some amount of profit booking on the Nifty. But if you look at us as compared to what we have done as compared to our peers, which is our global peers, we seem to be okay. So, for example, the Nifty on a week-to-date basis has lost around 1% and compare this to the MSCI Emerging Market Index, which is down over 2% on a week-to-date basis. So, compared to that, we're okay, holding at around 10,700. There's been a little bit of an intraday recovery, in fact, which has taken place. Overall, a lot of stocks in focus. For example, IDBI Bank, which was flashing on your screen, and we're going to be discussing that more deeply. And separately, a lot of other stocks, something like an ICICI Bank, which has really bucked the trend this entire week, and Tata Motors, and a couple of these oil marketing companies ahead of that OMC meeting as well. Hi, Prashant.
Ekta, hi. I mean, so for the week, by the way, we are down about 0.75%. So it's a down kind of week, unless of course something dramatically changes over the next couple of hours. One thing which can change, I don't know if it'll happen during market hours or not, is essentially the OPEC decision, which, I mean, there's a press conference scheduled at 4:30, and there is something expected in that. There's also talk that it may actually only come tomorrow. We saw what happened with a bunch of oil stocks as oil prices slid in the second half of the session. So, I mean, that's the big variable, at least in the very short term, what happens to oil. Otherwise, I mean, it's not doing very much. 12 points lower on the Nifty is what we have at this point in time. The big story, of course, we're tracking is what the government intends to do with IDBI Bank, and the stock will come up on your screen. I think it's up about 5%, and we're going to get you a host of reactions on what essentially is being talked about. Okay, it was up 5. It's actually come off the highs, 2.75% higher, just under 60 rupees. But we'll just get to that in a bit. We've got some trades, as always, in the top of the show. Kiran Jadhav is with us. Kiran, good morning. Good to have you with us here. So how would you sort of trade the market, the index, and what would your stock trades be?
Prashant, very good morning. For the Nifty, we believe that a base building formation is in process. We don't believe that, we strongly believe that 10,700 would be a base and this will not be violated. And on the higher side, there's a strong resistance at around the 10,780, 10,800 kind of mark. So we'll have alternate bouts of buying and selling between these levels. So whenever we are at support, we should go ahead and buy for a target of, say, 10,780, 800. And on the higher side, there will be another opportunity of selling as well. So in the days to come. So this is a narrow range that we'll be trading. So in this narrow range, there are certain stocks which are doing good for now. So since we are near the base, I've got both the buy calls. First one comes as Godfrey Phillips. Godfrey Phillips, the chart pattern is very strong. It has done a base building formation at around the 730 mark, and for the last 2 days, the stock has been creating momentum. Today, the volumes have been significant. We haven't seen these kind of volumes built up in the last, say, 3 months or so. So the average volumes have surpassed in the first 2 hours of trade itself. So we have a buy call on Godfrey Phillips. Stop loss would be 755 and target would be 789 to 795. That should be achieved by today or by Monday afternoon. The second call would be Mahindra & Mahindra. Mahindra & Mahindra chart pattern is also pretty strong. And Mahindra & Mahindra stop loss that we suggest right now would be 894 for a target of 908 to 916.
All right, Kiran, we're going to let you go on that note. Thanks very much for joining in and giving us all of your strategies. We do have Krish Subramanyam joining in to tell us what he's strategizing as well. Krish, over to you. Stocks as well as index. What are your calls?
Yes, Ekta, I think we have been in probably one of the most range-bound, series as of now. But I think we could see some big moves coming about. But I'm still going with the setting of this triangle. I think we are just a week left for expiry. So one could probably sell a triangle, sell a Nifty 10,600 strike put under 10,800 strike call. So the both sides yield a premium of around 55 bips. So keeping a target of around 10, and maybe one could keep a stop loss of 60. And stock specific, going with the buy call on TCS, that has been one of the strong points of this this particular series. And also seen some modest correction the last 2-3 days. So one could possibly buy an 1800 strike call that's quoting at around 20 to 22. Keeping a target of 45, and maybe one could keep a stop loss of 10. And I'm going to do buying of a strangle in ICICI Bank. Now, ICICI Bank has been making some sharp spikes here and there, but it's more bullishly biased. So I think going to expiry, we could see some interesting moves, but at the same time, be a bit cautious. Buy a 290 strike put and a 300 strike call. So the total cost comes to about 5.5 rupees. Keeping a target of 11, and maybe one could keep a stop loss of 2.
Okay, thanks very much. Appreciate you joining in with those trades. Let's move on to the IDBI story. Sources say that LIC is in discussion with the government to pick up a stake in IDBI Bank. Ashwin Parekh is now joining in to talk to us about this. Remember, the government already owns around 11, the LIC actually already owns about 11% in IDBI Bank. And how will this work? I mean, essentially is what we want to understand from Mr. Parekh, because I mean, there are rules both from the RBI side and from the insurance regulator side, which prohibit how much a single entity can own in a bank, and you know, we've got rules governing how much LIC may actually own in a single entity. So in the first instance, a single entity can own up to 10% in a bank with RBI permission, and LIC may own only up to 15% in a single entity. Mr. Parekh, what do you make of the story, and your first thoughts?
Well, I mean, I must say that there is much more to just the regulatory issues. You know, I mean, the first and the foremost is that we all know that there have been attempts made by IDBI Bank, you know, to really, I mean, they were initially looking for large private investors, you know, and they said whether they should be strategic investors or financial investors is something that was debated. In between, there was also this debate about demerging IDBI Bank. Now, the bank is in trouble. That is one thing very clear. There are huge NPAs sitting over there. The bet that the government seems to be taking, and I believe it's a bet in the right direction, you know, that if the money is provided to the bank at this point in time, if more funds are provided, and if the NPAs are funded and proper provisioning is carried out, then in a period of about a year, that is 4 quarters to about 6 quarters, you know, some value restoration may happen. And this will happen mainly on account of the recovery, basically, of all the bad debts that they are sitting on. Now, it's a bet. I mean, one doesn't know what will really happen. So from the business proposition, regulatory I'll come to a little later, but from the business proposition, you know, the bet makes some sense to the extent that LIC per se does not have any capital. I mean, the government has put in only 200 crores of capital. It's the policyholder money, policyholders kind of fund from which the monies will be deployed. So, I mean, if the bet works out and in about a year or 2 years' time...
Mr. Parekh, just to, sorry, but the money is going to the government, right? I mean, it's not going into the company. The government will transfer its government is selling its shareholding to LIC, is what the story is.
No, I agree. I agree entirely. But, you know, I mean, imagine that fund, that equity would have gone to a private investor, for instance.
Right.
And that's the point I was making. I mean, instead of that, it will now go to LIC, you know, Prashant. So to that extent, I mean, I would say that LIC will be holding that. Now, whether it is a strategic buy or it's a financial buy is a matter of...
as you were saying, you began by saying that funds infused into a IDBI Bank capitalized, but there's no talk of any of that. Essentially, it's just shareholding transfer. Government may get 11,000 crores. And I mean, of course, after that, as you said, I mean, it's up to the new owners in that sense. We don't know how much we're talking about significant minority interest, but it's up to the new owners, basically.
True. So that's the whole point. See, basically, even if they were to do a right issue, for example, after this, let's say, change, LIC will have at least enough money to pump in. Now, the other question is very relevant. I mean, the government seems to be owning more than 77-80% of the bank at the moment. So whether the entire equity can be transferred to LIC, I mean, to my mind, that will not happen. That cannot happen. You know, in such a scenario, I mean, unless, of course, both the regulators, insurance and banking regulators agree, in which case we are talking of a merger, but we are not talking of, let's say, LIC holding that substantial equity into it. But from the business point of view, it's a bet. I mean, the government had said that it will work its best effort to revive IDBI Bank in some form or the other. maybe this is one of those attempts, basically.
Okay. Mr. Parekh, you know, if you just go back to IDBI Bank's Q4 numbers, the gross NPA stood at 28%. I think it's one of the worst gross NPAs amongst the PSU banking space.
Yeah.
LIC, if they're even looking to buy up, say, around a 4 to 5% incremental stake, if it was a private investor, they would think hard on whether or not this would be a lucrative investment, obviously. So in that sense, would the IRDA or would there be any sort of regulatory authority which would say that, you know, this incremental 4 to 5% does not make any sense just based on the fundamentals that you have for IDBI Bank?
No, that's very true, Ekta. I mean, but the only point that I would like to make is everything really depends on the valuation, the value at which this equity is transferred. If it is at fair value, then it's a bet. I mean, you know, as I was explaining. If it is valued at par or it is valued, let's say, in any manner which is adverse to the policyholder's fund, then I suppose the insurance regulator will step in, you know, because he has to also look at the policyholders of LIC, you know, and who own these funds. I mean, basically, it's a life fund of LIC which will be deployed, you know. So your point is very valid. The valuation is the key aspect, I mean, at which this transfer happens.
Mr. Parekh, does it even make sense at a very basic level? What expertise does LIC have to, run a bank, basically, if that's what we're talking about here?
Well, it doesn't make sense. I mean, I am totally with you on that question. Basically, what seems to be happening is off late, you know, I mean, because the funds are not available with the banking system to fund economy any longer, you know, the government may have to look at other sort of, you know, pockets of funds. And at the moment, it looks like it's LIC. Whether that's the correct direction, otherwise time will tell, I suppose.
Okay. Mr. Parekh, you know, if in the case that, say, the government wants to divest more stake in IDBI Bank, they have around, I think, over 60% holding right now, and they probably want to try and bring it down. I know IDBI Bank is probably ruled by another act as opposed to the other PSU banks. So what are the kind of regulatory hurdles that they would probably have to face in order to do that? For example, would it have to go to Parliament?
Well, no. Actually, you see what, this bank is not under the Nationalised Banking Act. I mean, for all purposes, it's actually under the Companies Act, basically. So, I mean, by virtue of the amendment in 2012, this bank was actually converted into a company or corporate entity. So to that extent, the same set of, let's say, the provisions of the Companies Act, which is 75% of the shareholders will have to agree to such a thing, because any stake of a size more than a certain amount will require under the Companies Act, you know, the approval of 75% of the shareholders. I mean, of course, in this particular case, the government being the largest shareholder can still get that done or get that through. But that's one of these. So the whole thing will come under the Companies Act, to answer your question. And the provisions in the Act, you know, will apply, and the Banking Regulation Act will certainly apply in this regard. And in case of LIC, of course, the regulations of the insurance regulator will apply. And in regards the percentage of equity that in one single entity that LIC can hold, basically.
Mr. Parekh, thank you very much. Appreciate you joining in. Great speaking with you and getting that perspective. I mean, I think, Ekta, it'll be basically seen as the government using LIC as a piggy bank. I mean, to put it bluntly and straightforward. So there are regulatory issues and there are moral issues as well. I mean, why would you want to do something like this? So, I mean, we'll track that story and we'll get you more as we go along. Our colleagues from both Delhi and Bombay are tracking this, I mean, from the ministry side, from the government side, and of course here in Bombay on LIC and the insurance front as well. We'll take a very quick break here. The first on the show, the market's not doing very much at all. We've got a 12-point cut on the Nifty, 10,728 is where we're at. We come back and, of course, we talk about oil, center stage. Okay, 16, 17 points on the Nifty right now. 10,725 is where we stand at this point in time. Manisha is here with essentially what's top of the mind right now. Oil, OPEC decision, and the reaction to oil prices. Manisha, I had a question. You know, this OPEC decision business itself, the process of announcing the decision itself is pretty convoluted, right? We don't, I mean, last year also remember there was leaks and finally we got a semblance of what they actually decided. So expected to be the same thing this time?
Pretty much, especially with the kind of discord that we are seeing in the OPEC members right now. Yes, it is expected that you will hear the statements throughout the day. And the important thing is that while the 174th OPEC meeting is today, the 4th OPEC and non-OPEC meeting actually is tomorrow. And that is being led by Russia. So if you don't hear a statement or a decision today, then it clearly is going to be spilled over onto tomorrow. And it would be 4:30 p.m. our time tomorrow on a Saturday.
Or we may get 2 decisions, one today, one tomorrow. Possible?
No, that wouldn't be the case. But the final decision, perhaps, if doesn't come today, could be coming in tomorrow.
The only good thing is that we'll have time over the weekend, essentially.
I was just wondering that whether Russia is playing in the World Cup or not over this weekend, because I'm sure the priorities will be completely different then. Who cares about OPEC?
Well, they are, and it's an excellent team, by the way.
They're doing great, actually.
Yeah, and they're the host country too. Yes, well, so plenty happening with Russia around at this point in time. But in the meanwhile, the crude oil prices have been very volatile, very choppy there. The markets have seen the price movement in last few years, actually. Remember, we did hit a high of 112 in 2014. It was early 2016 that you saw the crude oil prices fall all over to $26 per barrel. It was January 2017 that the OPEC and allies came to this agreement to cut output by 1.8 million barrels. And that has continued for all of last year and much of this year until this time as well. The compliance has been positive. And even if we do see 500,000 barrels of an increase in supplies, the markets are assuming that it would be taken well in stride in case of the crude oil prices on where they are. But let's get in Azleen Ahmed as well with her sense on what really could be expected from the meeting and the reaction on the crude prices. Azleen, hi. First of all, what is your sense? Would we hear a decision today, or would that be spilled over onto a Saturday?
Well, I think that, as yesterday, I think that the market was a bit more confident that there would be some sort of agreement at the meeting today, and we saw the oil prices fall. But during Asian Day, the prices just jumped back up. And I think that right now, it's still anybody's guess about whether there will be an agreement or not during the OPEC meeting today. So my feeling is that I really cannot tell what's going to be the outcome, because obviously Saudi Arabia wants it increase, and that's backed by Russia and maybe a few of the OPEC countries who have spare capacity. But there seems to be a lot of opposition and growing opposition from Iran about how that increased production is going to be divided among the OPEC countries, because, countries like Venezuela and possibly Iraq, Iran cannot increase production. So my feel is that if there isn't any agreement that is reached today and probably tomorrow, we could see oil prices spike. But if there is any sort of production increase, even if it's on the lower end, I think we probably would see prices stabilize where they are, hovering around for Brent, probably around the low to mid 70s in the short term in terms of the next couple of months.
Azleen, the point also is that the global supplies as of now stand around 98 million barrels. So 500,000 barrels in that sense, would you, even if that is an increase from the OPEC in sense of supplies, do you see that making a lot of impact? Because as you said, there are more chances of crude oil prices moving higher from here than lower.
I think that I think that there needs to be. We've already seen the OPEC production actually lower than what was planned because they've been over-complying with the output cuts. A lot because of involuntary losses in production. So, for example, in April and May, it was May, I think, was 166% compliance. So, which means that they were already producing way lower than what the output ceiling planned. Yes. So, I think that they need to increase production at least to the output ceiling to maintain balance on the market. And I think if there is nothing, if they agree to no output changes, we could see tightening in the market, given that Venezuela's production is still low, and there's always that possibility of Iran export falling sharply by the third quarter or later in the year if the sanctions really hit.
Sure. So Azleen, really the supply side concerns are there, but what's your sense on the demand part of it? Because with the whole global trade spat going on, and India also looking to US to start importing because the prices there are on the lower side, do you see that sensitivity in sense of demand too?
I think we're expecting that demand is going to be remaining very high this year.
Okay.
In the first quarter, we saw demand roughly about 2% higher. That's about 1.9 million barrels per day. And I think on average, probably this year, our expectations is that there will be demand growth will be roughly about 2 million barrels per day. Part of it will be supplied by continued rise in U.S. production. But as we know, there's a lot of constraints in the pipeline for U.S. and that potentially could limit the growth in U.S. production compared to what was expected. So, I mean, our expectations is that demand is going to remain very strong. And I think we were expecting India demand growth actually at about 7%. So, the emerging markets is going to be, and U.S. is still going to be quite strong in terms of demand. So, demand is not going to falter, we expect, for this year.
Very quickly, Azin, and I just need two numbers from you here. If there is more than 1 million barrels of a supply increase from OPEC, where do you see prices headed? And if there is no decision taken, then would you see prices moving up again?
I'll answer your second question. I think that if nothing is decided and they don't make any agreement to increase production, I think that we potentially could see $80. I'm not sure whether we're going to go above $80, but definitely towards that. If they agree, if it's on the high end at 1.5, I think we'll still be around maybe 70, maybe just slightly below 70. I think 1.5 is quite a big increase already.
All right.
Okay. All right, Manisha as well as Azlin, thanks very much for giving us...
Manisha, by the way, is going to be in office tomorrow as well, right? Because you got OPEC tomorrow.
Oh, yes, thank you, Prashant.
4:30? I'll swing by.
And just not just me, I'm assuming quite some people will be in office tomorrow if I'm coming here. I'll ensure that.
All right, well, busy weekend for Manisha. Well, best of luck with that, and hopefully best of luck for the markets as well, where Brent crude hopefully doesn't see some dynamic, dramatic spike. But nonetheless, for the markets, we are seeing some amount of profit booking again. So 10,725 is where we're at. It's largely range bound, you'd have to say. Mid-caps Bank Nifty underperforming, and IDBI Bank has lost all of its enthusiasm from the day's highs, just about up around 1% as opposed to a 5% spike that it had seen just a couple of minutes or maybe a few hours back. So you can see that on your screen. Take a break. But up next, Mitesh Thakkar is going to join in to talk about the technicals of the market. Stay tuned. Welcome back. Well, Mitesh Thakkar is joining in to talk about the technicals of the market. Mitesh, hi. Thanks very much for joining in this morning. So overall for the Nifty, what would you recommend? We're just about holding above 10,700. And for the mid-caps and Bank Nifty, a little bit of an underperformance.
Good morning, Ekta. I think broadly, if you look at the entire week's movement, I think it's been a range between 10,830 to about 10,700. I think the way this, most of the momentum indicators are shaping up and they are still flat, means that maybe another 2-3 sessions could be spent in this range. But broadly, I think after a contraction, some kind of expansion will happen. So whenever this range of 10,680 or 10,830, 840 is crossed on the upside, you will get some kind of directional movement. So for the time being, the idea should be to trade ranges, which means that you try to buy close to about 10,700, 1020, keep a stop loss below 10,680, and on the upper side, 10,780, 800 should be your profit booking target, and around those levels, 10,800 and above, I think would be a selling opportunity. So right now I don't have a trade, but that's the way you'll approach a range market, range bound kind of market.
In terms of stocks, Mitesh, anything right now?
Yeah. So I have one sell and one buy. Eicher Motors, I think, is breaking down. That's a sell with a stop at 29,450 for targets of 28,500. And Canfin Home Finance, the intraday charts are looking slightly promising. So a long can be taken with a stop below 347.5 and look for targets of around 365 to about 366.
Okay, well, Twitter queries then. First one, Mitesh, Piyush has 75 shares of Reliance at 997. Wants to know the short-term view for the stock.
See, Reliance to me is extremely promising on the short and the medium-term charts. While today is down, I think the stock is trying to make fresh highs in a market which has not been doing that. So clearly outperforming stock. As long as the stock is about 990, 995, maintain a positive bias. I think eventually the breakout on the upside will happen, and in the next 2 months, I do expect a price target close to about 1100 over here.
Okay, Mitesh, thanks very much. Appreciate you joining in, and we speak again soon. in a bit from now. Okay, go on, Ekta.
There's one more query for Mitesh. Mitesh, let's answer that as well. Prabir has 50 shares of Gujarat Fluorochem, and that's bought at 485. Wants to know the long-term view.
Yeah, so I think the stock actually in the last many months, I think, has been more of, slightly corrective to sideways. I would say hold the stock with a stop below 650, 645 levels. I think the consolidation might last for a few more months, but since he's a long-term investor, I think eventually the stock will head towards 900 plus levels.